Before you begin trading on the MT4 or MT5 platform for the first time, it's important for you to understand the different trades that are available and how exactly you can make these orders. Having this fundamental knowledge on how to trade on the forex markets will be essential for you to stay safe and profitable while trading. Market orders are orders that are instantly executed against a price that your broker has offered to you. This is commonly referred to as buying and selling. For example, if you believe that the euro, EUR, will appreciate against the US dollar, USD, you can decide to go long and initiate a buy order in the EUR-USD market. However, as you enter into your position at prevailing market conditions, you may not be entering at the exact given price at the moment you decide to open your position. On the MT4 or MT5 platform, this is referred to as market execution. In contrast, buy limit, sell limit, or limit orders, buy stop and sell stop or stop orders are pending orders. These are orders that are to be executed at a later time once the market reaches the price specified by you. On the MT4 and MT5 platform, these are referred to as pending order. A limit order is an order to either buy below the market or sell above the market at a certain price, sometimes referred to as the limit price. In this way, the limit order is only executed when the price becomes more favorable to your position. You can choose to buy limit or sell limit. If the price does not reach the limit price, the order will not be executed, resulting in what is known as missing the market. For example, referring to the figure below, you may decide that you want to place a long position for USD, but you only want to enter at your limit price. In this case, you may choose to buy limit. Once the price reaches your limit price, the order will be triggered and the position will automatically be opened at market conditions. A stop order is a specific order to either buy above the market or sell below the market at a certain price, sometimes referred to as the stop price. In this way, the stop order is only executed in the event that the price becomes less favorable to your position. You can choose to buy stop or sell stop. If the price does not reach the stop price and instead moves in your favor, the order will not be executed. For example, once again referring to the figure below, if you are trading in the USD market and expect the price to continue falling, you may choose to sell stop. Once the price reaches your stop price, the order will be triggered and the position will automatically open at market conditions. At first glance, limit and stop orders may not appear to be different, as price is simply being placed above or below the current price. The key difference lies in the reason you're using them. Limit orders are particularly useful if you're looking to play a bounce or a reversal. Stop orders are particularly useful if you're looking to play a breakout. Hit like, subscribe, and turn on notifications. The next video drops soon and it's one you don't want to miss.